Okay, thank you for joining everybody. My name's Zishan, COO and co-founder at Yielders. Just some housekeeping rules before we start. Everybody is on mute. That's just so there's no background noise while I talk. We are also recording the webinar just for the benefit of a wider audience. We'll be placing that across socials and providing it to people that could not join. Also, if you do have any questions throughout, if you wouldn't mind using the chat functionality, so everybody should be able to see the chat functionality, type your questions out through there, even whilst I'm talking. The format of the webinar is effectively a quick 15 to 20-minute presentation for myself, just walking you through some key facts and some background to Yielders. And then we'll open the floor for a Q&A towards the end. Feel free to unmute yourselves and ask questions at that point, or just conversate with us via the chat function. Number of my colleagues on the line as well. We've got Josh and Jake, who are investment analysts, and Marwa is also on the line, who is our senior tech lead. So without further ado, let's get started. So who are we? Yielders is the first FCA regulated Islamic fintech platform in the UK. We have got investors from over 20 different countries worldwide now, and we provide accessible, simple and assured real estate investment opportunities to everybody from as little as £100. We're a fully FCA authorized but also Sharia certified business, so Islamic finance friendly, as we like to call it. And not only that, but we've also been able to consistently provide annualized returns of around 10% per annum for the coming up to 6 years now we've been in business, which is a fantastic accolade. Generally, our returns range from the retail products from around 5 to 7% net per annum. And then on the development projects and pre-funding, there are potential to earn slightly more given the risk nature of the project. As probably most of you are aware on the call, higher risk, higher reward type investment opportunities. So yeah, at a very simple level, we provide real estate investment opportunities to everybody. We've lowered the barriers to entry when it comes to real estate. So generally, if you think around the real estate transaction, you generally have to have large amount of a deposit, if not the entire amount to pay in cash. You generally have to source and look for properties. You then have to involve agents, mortgages if required, and then the solicitor's process takes anywhere between 6 to 8 weeks when trying to complete on a property, and then obviously the headache of ongoing management of a property. So effectively, we've removed all of that hard work for you, and you're able to interact with our platform and feel as if you're a buy-to-let landlord without any of the hassle that is associated with it. In terms of our journey, as I stated, we are coming up to our 6th year in business. So 2015, the business was actually created, incorporated. 2016, a lot of hard work went into the beta release of the platform, designing our secondary market and our regulatory submission as well. In 2017, we became the first directly authorized from the FCA and Sharia certified business in the country, at which point we were awarded the Global Islamic Economy Award for Money and Finance by the Royal Family in Dubai, which is a fantastic accolade, of course. 2018 saw a fantastic year of growth for us, where we launched a pre-Series A funding round to help grow the business. All of the technology by 2018 was developed in-house. And we'd signed a number of deal flow partnerships at the time to help grow the product side of the business. And back in 2018, when Brexit really was the hot topic, we took out regulation in Netherlands, Luxembourg and Norway just to support post-Brexit life. Last year, again, a fantastic year of growth from us. We grew our AUM up to just over 7.5 million. Executed on a substantial Series A funding round, which helped scale the business in terms of technology, obviously having enough bums on seats effectively to do a lot of the work that was required, and relaunched a brand new platform with a new UI UX interface, which really, I think, propelled our business to the next level in terms of the user journey and interaction that we have with our investors. This year, obviously, has been the COVID year, one that will stick in the memories for a very long time. But we've further enhanced our customer journey with our UI UX, developed open banking APIs, which for our strategic growth is hugely important, continued to expand our user base. And this year, we've really explored heavily in broadening our product offerings. So just some key metrics along the bottom, we've got over 6,000 users now, 5 investments that are currently full cycle, just over 7.2 million pounds of assets under management at this moment in time. We have a very high reinvestment rate of 67%. So this is generally down to the fact that our initial investment amount is £100. People like to test the market out, understand how the process works with £100, and then we generally seem to have a lot of reinvestment post that. As I've already touched upon, sort of a 6% net per annum targeted yield, and active number of SPVs actually from 1st of December is going to be 17. Now, why invest? This is a question that we tend to ask a lot of people. And I think aside from, the fintech element of our business, financial literacy and passing on financial knowledge has been a huge part of what we have tried to do here at Yielders, to help grow the community's knowledge and understanding of investments. Now, it seems to be a point in time, we actually calculated there's probably circa 250 to 300 million pounds solely in the UK of savings within the Muslim community that is relatively untapped. Now, generally speaking, it's untapped because there is a lack of opportunity for Islamic finance or Muslim investors in this country. But not only that, there is also a lack of diversity when it comes to the ethical nature of investment opportunities. Now, that is what we have tried to create, a solution whereby we're able to provide competitive returns, and that's competitive in relation to traditional financial tools, but something that's also accessible. Lowering the minimum investment to £100 has made it really, really accessible to absolutely everybody. We have investors as young as 18 and as old as the pension age, and everything in between. So really lowering that barrier to entry for people when it comes to real estate investment. Now, the reasons behind investing, aren't exactly clear to everybody. It's not something that we're taught in the curriculum in the UK. And it really boils down to each individual having to research and understand why investing is important. Now, there are 3 key elements that you can see on your screen in terms of passive income. So aside from everybody's 9-to-5s or however they do earn income, having your money work for you is something which is extremely important, to grow wealth, to sustain that wealth, and to ensure that we're able to pass on wealth to the younger generations. Now, being Muslims and Yielders being a Sharia compliant offering, savings is an interesting topic of conversation, given that the majority of the offerings in this country are pegged to interest, which is obviously not consumable for us. So really what we have tried to do is provide a solution which is as simple as a savings account that actually benefits investors return-wise. So as I've touched upon before, between sort of 5 to 7% net per annum as a savings offering. So rather than having your money sat in a bank account where it's actually losing value because of inflation, you have the opportunity to create an account with us, effectively leave your funds with us as you would a bank, and allow for yourselves to earn income from a rental perspective across a number of years. And, albeit it won't be as liquid as a bank, so you can't just go and take your money out straight away. However, we have got continuous liquidity available on our secondary market, whereby if you decide any time during your investment term that you'd like to sell, historically, we've managed to sell every single investment on our secondary market within the same month. So it is relatively liquid. In terms of growing your wealth, obviously, as you continue to invest, the expectation is that these returns will look to compound, which is a third and most important element, I think, of the financial literacy and the financial knowledge that we're trying to offer in terms of compounding your returns. recycling your investment and keeping them on the platform to continue to grow. And, looking at things from a investment term perspective, a 5-year investment term being relatively short term, whereas looking for 10, 15, 20-year investment terms is effectively how you would compound using our platform to continually earn over a long sustained period of time, and effectively allow your money to work for you rather than you having to spend your time going out to earn it. This is a way for you to passively continue to earn an income on savings that you otherwise, as I mentioned, either stuck under the bed, stuffed in pillows, or in bank accounts that is effectively doing nothing for you other than losing value. So if you haven't thought about investing before, investing into an asset class such as real estate is effectively, it's bricks and mortar. It's simple to understand. There's no complex tools or contracts that you have to be involved in. And again, touching back upon our business and what we've done to really simplify and streamline that process for everyone. How we've managed to do that is via our platform. So, you may just type in www.yielders.co.uk and just see a website, but actually it's a lot more than that. It's a platform with an extremely complex back end, whereby we automate all the payments out on a monthly basis. So we have thousands of payments that are administered across our entire portfolio to all of our investors on the 1st of every month. And that is done so but by the click of a button. All of the assets that you're able to see have all of the information, quite similar to Zoopla in terms of the amount. There's a calculator on there where you're able to calculate your returns, photos, a map to show where the asset is. So, we've thought about everything that you may want to know about a property before investing it, and all of that information is readily available for you to review in your own time before you make your decision. Automated payouts, you get automated emails every time we have a new asset listing. Now, the demand over the last few months has been absolutely fantastic. So, people are always keen to ensure that their notifications and everything are turned on when they receive an email for us to be able to invest. And yeah, we've worked really, really hard in terms of the platform, streamlining it, the customer journey. You're able to create a profile and invest in no longer than 6 to 7 minutes. It's something that's really easy to use, and there are obviously team members on hand to answer any questions should you get stuck throughout the process at all. The types of investors that we've got. So there are 3 categories that we sort of bunch our investors up into. An everyday retail investor. So these are investors that will sign onto the platform, and what you see on the platform in terms of availability to invest from as little as £100 and start earning on a monthly basis from any of those investment opportunities. A sophisticated investor. So this is someone who would have to follow some of the additional onboarding tasks that we've got. So providing proof of funds, having a conversation with one of the senior members of the team just to understand either they've invested previously or have some sort of investment experience or real estate experience. And you will then get an opportunity to be involved in some of our off-market deals. So the pre-funding element, which I will talk to you about as a product shortly, but also some of our development projects, of which we've got a couple in flight at the moment. And then finally, our high net worth or top yielders, as we like to refer to them. So these again are, high net worth, ultra high net worth people who are able to provide proof of funds, and also may have investment experience, again, getting the opportunity to be involved in these higher risk, higher reward type investment opportunities that we have available. Now, how does all of this work? It sounds fantastic, and I'm sure you're all probably scratching your heads trying to understand exactly what it is that we do. Now, in terms of the development opportunities, so we identify opportunities. These are carefully vetted through an entire process that we have created and rolled out. And the investment committee is a committee that sits on a weekly basis and assesses all of the information that our team of very hardworking analysts pull together to scour the market, find these opportunities, assess them against our target thresholds and the requirements that we have, and then the investment committee effectively signs off on them. Each of our assets then has a limited company created for them. So each of the assets is acquired via a limited company. And point number 3 is where we have our high net worth and sophisticated investors who are obviously very key to this process. So the larger ticket items fund the acquisition of these deals for us. So we would have outlaid all of the specifics in relation to the deal, the acquisition costs, all of the fees, the development costs, everything associated with the project timelines, etc. And then off the back of that, they make their own decision that they want to commit X amount, and we then pool all of those funds and then go to point number 4, whereby we acquire the assets. Now we've got a team of solicitors that we've partnered with, a solicitors firm and surveyors. So the conveyancing and acquisition process is very streamlined from our perspective. And then given the chosen contractor that we decide to progress with, the development is completed over a period of time in line with the investment term, allowing for building regs to sign off and a sales period as well. At point 6, execution and sale or retainment and tenanting of the completed development for either a platform exit or exit onto the open market are the different types of liquidity events that we may have across the life cycle of one of these investment opportunities. Now, what does that actually look like in terms of an opportunity? So on your screen at the moment, you'll see the Park Hotel development, which actually is, I'm told, 96% now funded. This is actually an extremely lucrative opportunity that we've got available at the moment. So it came round for a second round of funding due to some issues on site earlier this year, and actually a very short investment term for a pretty healthy looking ROI. So we're offering a 30% net ROI on this investment opportunity, which is 96% funded. So, you know, very, very close to having the full commitment amount. The view is that this building will actually be complete in December and fully ready for tenancy in January. So that's January 2021, probably 8 weeks away, 6 to 8 weeks away from complete completion. We will be kicking off the tenancy process with a local agent into December. So the next site visit is scheduled for week commencing the 12th of December, whereby we'll have a local agent come in, take photos and start marketing for tenancies. So the view is that it should be completed tenanted January, February next year. And that will allow us a strong 10, 11 month period to look for a sale, either via an open market sale or alternatively liquidating on our platform. So a very lucrative investment opportunity, a 30% ROI available on this. And because this is so close to being completely full, there is another one which is also very similar. So this is a purpose-built student accommodation in a similar location. There's 33% funded at the moment. There are some offline discussions that we're having with some individuals that may take up the remaining amount, which we should have agreed towards the end of the week. But again, at this moment in time, there is circa £450,000 available to invest in this. Again, a 30% ROI is available. This is set to be completed in January. So we had a site visit yesterday, in fact, and it's looking on track for completion in January. Second fix of the mechanical and engineering is being completed as we speak. Which will then allow contractors to paint and decorate the building throughout December and into the first couple of weeks of January. So again, a relatively short investment term in terms of completion, and then it gives us that 10 to 11 months to agree a sale on the open market, or dependent on how investors want to liquidate, using the platform to provide returns to investors in terms of a capital and profit. So again, a 30% ROI net is available on this. It's a 12-month investment term, but as I've said, we're probably 6 to 8 weeks away from completion of the building. So really getting it tenanted and getting it ready for sale. And of course, whilst it's tenanted, the returns will be enhanced further because you will be earning from the rental income whilst we're trying to agree a sale. Now, the other product that I wanted to speak to everybody about today was the pre-funding opportunities. So Again, the process followed is fairly straightforward. Again, our team of analysts are working really hard to identify and vet these opportunities. So imagine we get inundated with real estate on a daily basis, deals that come through. We have to quickly and carefully assess whether they are viable for the platform. So we've got some pretty stringent target thresholds that we have to adhere to. And the process is very streamlined. Once we've identified that opportunity, again, a limited company is created specifically for acquisition of that asset. We then use, again, high net worth investors funds. So these are high net worth and sophisticated investors funds to pool their funds together to actually acquire these assets. The rental agreements are then put in place, or more often than not agreed before we decide to progress. And generally they are with tier one providers. So these are local housing authorities or councils, where they have strong covenants to minimize void periods and maximize profits for investors. So at point number 4, the asset is owned, it's producing an income, and it's in a limited company structure. And that is the point at which we list it on the platform for retail investors to come in and purchase the shares off of the high net worth investors. So effectively, our high net worth investors are acting as our anchor investors, or in inverted commas, our bank effectively. So we're using their funds to acquire the asset. And the way that it works for high net worth investors effectively is that you'll earn the entire month's rental income dependent on your shareholding for the first month. You have the option to hold a 25% stake in the investment term for a longer period of time, where you'll earn rental income on that. Or you have the ability to liquidate your entire holding and have all of your capital paid back. Just to give you an indication, the last asset that we listed on the platform was £180,000, I believe, back in August. It sold out in 7 hours. So the liquidity events are pretty good on the platform, and the expectation is, I think most high net worths who pre-fund have all of their capital back if they would like it within a 1 to 2 month period max. So yeah, that is a pre-funding model. So effectively, as I mentioned, the pre-funders, high net worth, ultra high net worths, who are providing funds to acquire the assets that you see on our platform. Now, in terms of pre-funding, the benefits for this effectively, so you're getting first refusal and first access to investment committee approved assets. So these are assets which have gone through a rigorous due diligence process and we're happy to acquire. You're able to hold 100% of your equity for the amount of time it takes to sell. So definitely 1 month. But if, for example, we don't have as much demand in the first month, you may be able to hold your entire equity for 2 months. You have first refusal and first view of these properties. So as soon as they are analysed and reviewed, and generally speaking, these are off-market opportunities that we've got a network of agents and deal flow providers that give to us. So not something that you're going to be able to get your hands on by yourself in the open market. Opportunity for cyclical reinvestment. So I'm going to run you through after this an example of placing £100,000 with us and what that means for pre-funding. As I've mentioned, you get to potentially retain 25% of your equity for the entire term, which would allow you to earn on 25% of your ownership for 3 to 5 years, dependent on the investment term. You will continue to have dividends paid to you on a monthly basis. If that is the case, on the first of every month, we have now completed 60 months in a row without failure payment to all of our investors on the first of every month. It gives you the opportunity to de-risk and diversify your portfolio. So you could own shares in a number of different properties across the UK, allowing for that diversity and de-risking. And not only that, but you're also providing opportunity to the community for unleveraged real estate investment opportunities. So you're pre-funding, you're earning, but you're also providing the opportunity to make investment opportunities like this on an equity basis available to everybody, or every yielder that does exist, which is, aside from the financial benefits of our business, we are really trying to promote that community element and ensuring that everybody has an opportunity to invest into an asset class which is producing an income and that is easy to understand. Now, in terms of what this actually looks like from an investment perspective, so really what you can see on your screen, there is a lot happening. Don't worry about that. I'm going to explain everything to you very carefully, step by step. So this is what £100,000 placed with us over the next quarter would look like. Each of the examples, so Shaw Heath, Fright Building, Diana Street and Godstone Road, are all now investment committee approved assets. These are assets which are in our pipeline that we are working with our solicitors and conveyancing team to acquire. So they're in the pipeline, they're signed off, and they're ready to go. Now, what we would effectively look to provide is, at point number one, £100,000 has been committed from an investor, and they have decided to retain a 25% share. So £25,000 of that £100,000 is held from month 2 to month 60, earning them 5.23% per annum. Month 1, they are earning on their £100,000 the entire amount. So if they invested £100,000, the asset is worth £410,000. They effectively own a quarter of that, so they would get the quarter of the total rent. And then going forward, after month 1, once it's listed, they would get paid back £75,000 of their capital. £25,000 is held in the asset and will continue to earn for 5 years. And then we would take that £75,000 and invest it into the acquisition of the next asset, which is the Fright Building, a £473 total fundraise. And again, their £75,000 would be held on account. They would earn the entire amount of rental income based on their shareholding for the first month. And then again, a £25,000, 25% retention of £75,000, which is £18,750, is retained for, again, a 5-year period. So you've now got a £25,000 holding in one asset, an £18,000 holding in another asset. And then in month 3, you're returned £56,000, which is less the last 2 investments. And then we have the third investment opportunity lined up to £170,000 in Scunthorpe. So slightly higher yield with this because it's up north. Again, the entire £56,000 is invested in month 1. So you earn rental income on that entire amount in the first month. Decide to keep a 25% stake, which is £14,062, and you'd earn 7.27% per annum on that for the 5-year investment term, at which point you'd have £42,000 of your original £100,000 returned to you, and we would have another investment opportunity lined up at Godstone Road, £260,000. You'd earn the entire amount of rental income on that for the first month, and then decide to hold a 25%, which is £10,000 for another 5 years. So you effectively have got a £25,000 holding in one asset, 18 in another, 14 in another, and 10,000 in another. So you're invested across four different properties right across the UK, which has diversified your risk. You're earning different levels of return across each 4 of these properties. You've had £31,000 of your original £100,000 capital returned back to you. Now, what does this actually mean in terms of earnings? So you've had that £31,000 returned back to you. You've had 4 months worth of net return on your entire capital across 4 different properties. You've got a retained invested capital of £68,000 of your £100,000 across 4 different properties, around about a 3.9% annualized net return on those retained investment across all 4 of them, which again may not sound like a lot when you look at it, but when we show you a comparison sheet against other traditional financial institutions and your earnings against that, you'll be able to understand where we sort of fit in. And then based on the rental income for the 5 years worth of retained equity, you're earning circa £13,000 on your £100,000, completely passive income that you have available to you, and also, a liquidity event whenever you want. So for example, the first asset that you invested in, where you've got a £25,000 holding, it's a 5-year investment term. In year 3, you decide, right, I want to go on holiday and I want that £25,000 back. You get in contact with us. We'll list those shares on the platform for you. within the month they'll be sold out. So you'll have your entire £25,000 black, plus obviously all of the net returns that you've achieved in those 3 years. So yeah, the way that we like to describe it is effectively a very liquid savings account, whereby you're continually earning on a monthly basis yield, but have the ability to exit should you ever want to using the platform. The most recent opportunity that we have now opened for pre-funding. So again, this is off market. I think probably only actually made the platform today. So it's still considered off market. It's a fantastic 3-bedroom flat in Wembley in London, offering a 4.4% net yield, which, you know, if you know anything about London yields, that is extremely strong. Generally 2 to 3% in London is deemed good considering the values of the properties. So yeah, it's a really lucrative investment opportunity. We've already had 25% of this committed as of today, when it went effectively live to the open market. So yeah, it's tenanted under a HMO license with a 15-year FRI lease. So, you know, the covenants around this is extremely strong. Expectation is there will be no void period, so we'll be able to earn throughout the 5-year term. And then when we do sell it, there is 10 years of an FRI lease to sell on, which, you know, looking at capital appreciation here in London over the next 5 years, it is a very strong opportunity that we're looking to fund. So as I mentioned, there are a number of my colleagues on the call this evening, and obviously there is interaction via the platform. So if this is of interest to anybody on the call, let us know, get in contact. We obviously will be available, but yeah, this is a fantastic investment opportunity available Northwest London in Wembley, 4.4% with a total fundraise of £473,000. In terms of numbers, what that would look like for that £100,000 example that I provided, 4 investment properties, geographically diversified, as I've mentioned, in the Midlands, north of England, London, and just outside the M25. Each of these investment opportunities has been ratified and signed off by the investment committee. So a high level of due diligence has been conducted on these. We have been providing these sorts of opportunities for coming up to 5 years now. And the performance of our assets has been generally quite strong. A little bit of adversity this year, but that was to be expected. Annualized returns for retained investments. So this is, again, passive investments across 4 different assets of just under 4%. And then 1.2% in your original capital, the 100% effectively that's held initially. Now, I touched upon before, how does this compare? You know, some of you may have turned your noses up to £13,000 across 5 years, but I must stress that this is passive income. You know, you're doing absolutely nothing for this other than leaving your money in an e-wallet, getting an email on a monthly basis to say, oh, you've got rental income. Now, our product offers you a 3.9% per annum income. In comparison to some of the traditional opportunities on the market, Goldman Sachs have a product offering a 0.5%. I think that's their basic savings account with a 12 months fixed term. Another halal opportunity, Rayan, is offering a 0.9% per annum fixed rate term. Another REIT, which is Brick Lane, a Sharia residential REIT, is offering 3.3%. That was their 2018-2019 performance. The NatWest Savings Builder product, 0.7%, and UBL, UK Islamic Notice Account, 1% per annum. And you'll also see that there are 12 months fixed terms in there, 90-day liquidity notices, potential minimum investment opportunity requirements, which may be quite high. We're able to offer liquidity available generally in a 30-day period. Obviously, that's dependent on our secondary market saturation. But as I mentioned, all of the investment opportunities we've ever listed on the secondary market have returned the liquidity within a month. So yeah, as you can see, in comparison to some some pretty big hitters when you think of traditional finance. We come out as a very strong product that has continually provided these sorts of returns to our investor base. And our pledge to you when you're investing with us, so touching upon again the Sharia element of our business, rather than creating a very complex Sharia compliant structure, we've created a Sharia based business, 3 core, very simple beliefs which align to the principles of the Sharia in terms of Islamic finance, sharing in risk and reward with our products, investing in a product which is not volatile in nature. So you think of stocks and shares, quite volatile in comparison to a steady increasing trajectory with real estate over the last 30 years. And finally, providing transparent, interest-free, traditional finance and banking-free investment opportunities. So there's absolutely no leverage, traditional finance or banking product associated with any of what I have spoken to you about tonight. Aside from that, it's an ethical investment opportunity. We are trying to change the perception away from an interest-riddled society, away from debt and away from leverage, rental income that is paid on time, the first of every month, 60 months in a row without fail, which is a massive achievement. No hidden fees or charges. So with each of our investment opportunities, you get a financial summary, which is a profit and loss of absolutely all of the costs, fees, and earnings associated with each of these. So, what you see is what you get. A diversified selection of properties, both commercial, residential, and across a number of geographic locations. A friendly and attentive team who are always on the end of line of the phone, our chatbot online or emails to answer any queries that you may have, and clear, open and honest communication about what we do, how we do it. If there are any property issues that arise with the property throughout, you're completely kept abroad, like I said at the beginning, like you're a buy-to-let landlord, but without the hassle of a tenant calling you at 3 a.m. because a pipe's burst. We sort out all of the management of the properties, and is a very hands-off, easy to use, easy to understand investment opportunity. That is it in terms of the presentation. I'd like to thank you all for listening to me ramble on for half an hour. What we are going to do now is open up the floor for questions. I can see there's also 8 questions that have come in. So I'm going to just step through these, and obviously please feel free to ask any more should you have any questions. So the first question has come up, aside from people saying they can't hear me, and I hope you managed to sort that out throughout and you've not just been seeing the slides change on the screen. At what point are pre-funded properties placed on the secondary market? Is it before or after they are tenanted? All of the assets, when we acquire them, have a lease agreement in place. So it's another element of the business which is fantastic. So you're able to earn almost immediately. So we offer payment from the following month. So if you were to invest today, your first payment would be on the 1st of January. So for next month's rental income. But yes, all of the assets are tenanted before we list them onto the platform. And whilst we are acquiring them, the tenancies are in place. So, for example, with the Wembley property that we're looking to acquire, as I mentioned, there's a 15-year lease in place with that. The next question, do pre-funding investors have any fees? So what we have created is a methodology whereby all of our fees are rolled up into the asset value of the amount that we raise. So for example, if the asset is worth £100,000 and there's £2,000 worth of costs associated with it, we will add our 2.5% acquisition fee on top of that. So we would list the asset for £104,000. Now, the reason why it's not as simple as me to say that you're not subjected to any fees, because initially you are. So we will take all of the £104,000 from pre-funders, add it to, it will be collected. And what we do not do though, until we have listed the asset onto the platform, that is the point at which we take our fee. So actually your fee as a pre-funder is pretty much instantly reimbursed the moment at which we pay the capital back to everybody. So effectively it is fee-free because you're earning the income that you get to earn on month 1 without a fee attached to it. Although within the line item of the profit and loss, you will see a 2.5% yielder's fee, which you originally fund, but when your capital is paid back to you, it's effectively refunded. Is there a minimum investment for pre-funding? Yes, generally we say a minimum ticket item is £50,000. This is more so to prevent numerous people coming in. So if you think about anything less than 50K on the 400 grand asset that we're about to list, it becomes a little bit difficult to manage more than 3 or 4 pre-funders available to that. So generally, we tend to say it's about £50,000. However, each high net worth and each pre-funding opportunity is based on an individual basis. So the likelihood is one of the senior investment analysts or myself personally will have a conversation with you to try and understand your motivations, what you want to do. Each individual is treated on a case-by-case basis. So we advertise it as a minimum of £50,000. However, we have taken less than that before. Some people have come in at £40,000 or wanted to try it at £30,000. And dependent on the circumstances, we may be willing to invest, accept less. However, generally, the minimum investment for pre-funding is £50,000. Has there been Sharia approval on the transactions? It appears to be a combination of equity and debt from the top yielders, which I would understand to come under the prohibition of 2 deals in one. There is no debt. It's all equity based. We only take equity investment. There is no debt or leverage associated with what we do. And yes, there was a fatwa issued on the business and all of its processes when we first were incorporated, and we conduct an annual Sharia audit as well. Not that anything has changed. All the fundamentals of the business are the same. We transact the same. All the contractual relationships are exactly the same. Yes, effectively is the answer to your question. Are the investment products covered by FSCS? No, they are not. We do not have client money handling privileges from the FCA, nor are we a bank. Banks offer FSCS coverage up to £80,000, but we do not. Each of the assets is held within its own SPV. You are the shareholders of that SPV, so you have real ownership and real rights over your shareholding effectively. So it's not FSCS covered. Next question. If I put 100K on a 200K property, I am forced to sell 50K and keep the other 50K, hence I'm giving a 50K loan. It's not a loan because you are still the shareholder. You will earn income on the 50K that's remaining. You don't have to keep it there. You can decide to sell it at any point. Yeah, it's not considered a loan. You're earning rental income for shares that you own of the asset. It is yours, so you're entitled. If you have 50K holding, you will be paid your income on that 50K. Are there any longer term plans for setting up a REIT? So I think I touched upon it during our timeline slide. This year, we have been given the inability for 4 months to transact because of the supply chain being closed down. A lot of hard work has gone into looking at our product suite and trying to develop that. At this moment in time, if your understanding of real estate and REITs and investment opportunities, it's really not a good time to get into that sort of market given what's gone on this year. So there are plenty of conversations and a lot of analysis that has been done about a fund-based model, a REIT, SIP, ISA, SaaS products that we may be able to offer. It is something that we are working on in the background, and hopefully we will be able to present something to investors around that shortly. Is it possible to get a recording of this webinar? Yes, webinar has been recorded and will be circulated. You say that there is a 30% return of the top yield of properties, but isn't that dependent on the sale price at the end? Of course, we're projecting that 30% ROI. We have had 2 GDV RICS valuations completed, so the gross domestic value of £2.1 million in both instances of the exit. So that 30% is what we have projected. Obviously, those amounts need to be achieved. We have more than enough confirmation from the RICS surveyor and local agents that that is a reasonable price. We've also conducted numerous levels of analysis and due diligence to ensure that that £2.1 million is achievable. If we're able to if we're able to get the RICS valuation done at the end, which supports the 2.1 million, again, we've had 2 previous ones done, and we're not able to agree an open market sale, then we're able to list it on the platform for 2.1 million pounds, which will ensure that investors are able to have their profit and capital returned to them based on those parameters. What are the tax implications for foreign non-UK investors? Are the returns subject to withholding tax of some sort? We always suggest that you get your own tax advice from whichever country it is you're from. Unfortunately, given we have investors from over 25 different countries now, it's hard for us to provide tax advice or understanding of individual countries' tax legislations. So it's difficult for us to say, but if you want to speak to us more directly in relation to where you're from, we might be able to provide some more personalized answers. But we do accept investment from a whole host of different countries. So yeah, we'll probably be able to answer that question offline. Is there any interest involved, for instance, while buying the house, the monthly cost? Interest, I'm assuming you mean interest from a financial product perspective. No, there is no interest, no leverage, no bank, no mortgage, no nothing. Why is there no allowance for capital appreciation between the pre-funded opportunity and listing on the secondary market? There doesn't seem to be any financial benefits for the pre-funders over the secondary market buyers, even though they take much more risk. So the risk is mitigated because these are assets which are acquired based on the returns that we're able to offer, the tenancies that are already in place. Now you have allowance for capital appreciation if you'd like to hold 25% of your stake for 3 to 5 years, the entirety of the investment term. You will, of course, be subject to the capital appreciation if there is any. The benefits for pre-funding are the short-term earnings and the liquidity event. So, you know, you might place £100,000 with us, the asset might be worth £200,000. So you get the half of the rental income for the first month. And within that same month, you'll have your capital back. And we can then deploy that money to another asset. So there are benefits from that. Like I said, rather than leaving £100,000 staring at you in your bank account, you could put it to use and allow it to earn money on a monthly basis with us. And then if you would like to hold a 25% stake and take into consideration the capital appreciation, which may or may not occur dependent on where the asset is acquired. You mentioned that the Wembley pre-funding was available from today on the platform. However, I'm unable to find it on the platform. I believe that will be going live this evening. I think post the end of this webinar, if you've got a top yielder profile with us, you will be able to access that and see that online. What returns are paid for developer investors who choose to exit an investment early? Is this a return of the initial investment at face value, or is a capital appreciation that's built into the sale upon the secondary market? Generally speaking, it is sold for the nominal amount that you invested in at. If you would like to change the amount at which you list your shares at, you are entitled to do that. You're also entitled as a shareholder to have your own valuation conducted if you wish. You decide effectively the amount that you want to list it for. We will list it for that price. Obviously, you've got to take into account that if you're adding values to your shares, it may be harder to sell. It's completely up to you, excuse me, as the shareholder. But what we do ask, if you do want to list the asset at a different price, then because all of our prices are supported by RICS valuation, we'd expect a RICS valuation to support your share price. But generally, up till now, all investors that have listed on the secondary market have listed for the price that they bought in at. What everyday opportunities are available as of right now? On the 1st of December, we are listing an asset in Stockport, 450 or 60K, I can't remember off the top of my head. The returns are 5.2% per annum net, and that will be going live on the 1st of December. Have you exited any property yet? Can you give an overview of the assets you've exited and how the returns compare with what you had anticipated? Yes, we had a full life cycle investment. We've had a couple of full life cycle investments, some great proof of concept. The first one that we had was in Gravesend, so just outside of London in Kent. It was originally projected to achieve a 25% 5% return over 3 years. We actually overachieved. I think it hit 55% ROI over the 3 years. So we outperformed the rental income. We achieved more than we were expecting. And given where it was bought and the capital appreciation, we absolutely smashed our target ROI. So rather than a 25% ROI over 3 years, it was a 55% ROI over 3 years. We're more than happy to share those exit report details with everyone who wants them. The second asset which achieved the end of its investment term was in Milton Keynes. That was due for sale just as the coronavirus pandemic decided to take force earlier this year, which caused issues in terms of trying to exit. We had a valuation that came in below the capital value. Now, in the original capital value. Now, in the instance that this happens, this is the beauty of us versus traditional financial or traditional mortgage investment opportunities. You as investors are in complete control of what happens next. We got a valuation that came in that was below the original price that we paid for it. We submitted that to all in the investors, and the investors took a vote to say, no, we do not want to sell. We would rather hold the asset for another year, wait for the market to recover, at which point we put a new lease agreement in place for another year, tenanted the property out for another year, which is now, I think, 4 or 5 months into that tenancy, and we will have it revalued and look to sell it next year. So rather than any investors taking a loss because the asset was not worth what we'd originally bought for it based on a valuation at a point in time, we were able to provide a different exit where we extend the investment term, let the market recover, because no one was really trying to sell properties in mid-COVID season, and look to resell the asset next year when the market has recovered. So again, the flexibility around our exit scenarios and our options are there for everybody to see. And should we not achieve what we set out to achieve, there are options that we're able to explore, so everybody will at a minimum get their capital back, plus all of the rental income that they've earned, and hopefully some capital appreciation. What are the zakat implications for holding these investments? Does yielders make these payments, or is it upon the investor? As with every zakat payment, the implications are your own. Your zakat is your zakat. We have got guidance on the platform around this under our FAQs, which outlines the specifics. I won't go into them now, but there's a very clear article which was written by our Sharia advisor, which outlines all of the elements of the income that you receive and the investments and how you should pay zakat on them. Are we listed as shareholders in the SPV? Yes. So each of the shareholders, we perform a corporate governance process at the end of every month where we transfer the shares. And as with any other limited company accounts, a confirmation statement is filed on an annual basis. So once that's filed, you will appear on Companies House as a shareholder. Is there any way I could discuss my Sharia compliance concerns with the Sheikh who's approved your model? More than happy to take on any questions you have in relation to the Sharia certification. You can direct them specifically to us at team@Yielders or investorrelations@yielders.co.uk to speak about them more directly. In the UK, how does the tax work with Yielders investments? So each of the investments that I mentioned is held in an SPV. So all of the returns are subject to corporation tax. However, all of our returns are advertised as net. So the 5% net that you generally see on our properties has already taken into account fees, costs, and taxes. Your personal tax liabilities are your own. There's a £2,000 dividends tax-free allowance for the government per year. I think the capital gains allowance has gone down to £8,000 per year. However, if you are to invest via a limited company, which our platform also allows, that is actually the most tax efficient way for you to be able to do so, because once a profit is taxed in a single corporation in this country, it won't be taxed again until you decide to draw down on it. Can you run through a detailed example? I'm not sure what we have an example of. We can pick that up offline. Yielders appear to be loss-making currently according to company house filings. How are Yielders backed financially, and what assurances do we have that Yielders won't go out of business, leaving us to manage the sale of our SPVs ourselves? Fantastic questions. I think any startup across their first 2 or 3 years does show a loss. So please don't pay too much attention to our company's house filings. We completed a Series A fundraising round last year, alhamdulillah, which was very, very successful. We overfunded on seeders, which provided us enough liquidity to scale up the team, have plenty of cash left over in the bank to continue to grow and diversify our products and our team. In terms of insurances, should we ever go bust, which I don't envisage happening anytime soon, inshallah, each of the assets is held within its own limited company structure. We have an agreement in place with our accounting firm. Should anything ever happen to yielders, they would continue administering each of the SPVs, so paying out dividends and administering the assets to sale when required, should anything ever happen to our business. So each of the assets is completely ring-fenced away from any performance of yielders, which is obviously hugely beneficial to our investors. That seems to be it in terms of the list of questions. I'm going to give everyone a couple of minutes if there are any more. If not, then as I've said, you're more than free to visit the website www.yielders.co.uk. All of the information is on there in relation to how everything works, who we are as a business, all of our certifications, both from an FCA perspective and our fatwa is available on the platform. There is a very, very good FAQs section to the platform where you're able to pretty much get an answer for everything that you may require. If you still need further help after that, again, there's an automated chat bot online where we is manned pretty much all of the time. Phone line and email addresses for people to get in contact. Is there any blog for UK investment tax? I can't recall if we've written a specific tax blog. There is a number of different blog articles, again, on blog space on our platform, which outline loads of information in relation to not only us as a business, the macro and microeconomic conditions, the real estate market. One of our analysts, Jake, is particularly good when it comes to writing our blog series, so please do check them out. And there is a specific tax FAQ which does outline all of the specifications in relation to UK tax. It seems as if that's all of the questions for now. I just wanted to take some time to thank you all for your questions and for listening in attentively. As I said, there are imminently some really good opportunities available. This Wembley deal, we'd like to secure the funding for that before the end of the year so we can complete and have another fantastic London-based property on our platform with a really, really strong covenant. So I think that works well. And if you're not wanting to get involved in the high net worth stuff, then as I mentioned, a new retail deal in Stockport will be going live on the 1st of December. Aside from that, thank you very much all for your time. We look forward to hearing from you, and over the next couple of days, expect some emails from us just providing the deck that we've gone through, the webinar recording, and just some more information in relation to the investment opportunities that we've got live at the moment. Thank you very much for your time. Take care.